10 years have passed since the worst moments of the global financial crisis and the recession, the devastating recession that followed. Now that you have the luxury of doing research, you've stepped back to look at why was it so bad and what can we learn from that. In your paper for the Brookings Papers on economic activity, you distinguish between the causes of the crisis in the first place and the failure of economists to foresee how deep the recession would be once the housing bubble burst. And your paper really focuses on the latter one. So what do we know about why it was so hard to foresee the depth of the recession? I mean, after all, it was in the spring of 2008, forecasters at the Fed and elsewhere were predicting a recession, but not one nearly as deep as the one that followed.
No, that's right. There was really two forecasting errors made. One was identifying the crisis itself. Many people saw aspects of it coming. Robert Shiller talked about the housing bubble. Alan Greenspan talked about risk-taking. But nobody saw how widespread and devastating the crisis itself would be in terms of financial markets and financial institutions. But the second forecasting error, one you were alluding to, is the effect of that crisis on the broader economy. And now, there was a lot of reason to be worried about that, and policymakers, including many of us at the Federal Reserve, were quite worried about it. We knew from history, the Great Depression, for example, where I'd done a lot of my academic research, was a situation where the collapse of financial markets was a major contributor to the depth of the Depression. Likewise, we know that historically, big financial crises are often followed by long and deep recessions. But that being said, the formal models that we were using at the Federal Reserve and other forecasters were using did not pick up the depth of that reaction. So to give you an example, the Fed staff, which are the best macro forecasters around, even after the crisis was getting into its worst stages, saw unemployment rising only to, say, 7%, when in fact we know that in 2009 unemployment hit 10%. So they were underestimating how bad the impact of the crisis on the economy was going to be.
So with the benefit of hindsight, why was the Great Recession so deep and severe?
Well, as my research suggests, I think the critical element was the fact that there was a financial panic. A panic, in the 1930s, a panic would be depositors lining up to take their money out of banks. Now, we have deposit insurance now, so we don't have runs on banks as we did many years ago. But there were other kinds of runs. So, for example, investment banks, which held all kinds of types of credit, financed themselves with lots of short-term funding, like the so-called repo market, commercial paper, other types of uninsured short-term funding. And there was a panic, analogous to the 1930s, but in an electronic form rather than people lining up on the street, that pulled the funding away from these firms, forced them to dump credit, forced them to stop making new loans. And so the cost of credit, the availability of credit plummeted. It was that credit supply shock, I think, that was the most devastating aspect of the crisis in terms of the real economy.
So the housing bust starts the problem, but the housing bust alone doesn't explain how deep the recession was.
Yeah, if the decline in house prices obviously had important effects. It lowered consumer wealth, it made people less willing to spend, and ultimately the collapse of the mortgage market was the thing that triggered the panic, the run on financial institutions. My claim would be that without that run, the housing bust would not have had nearly such deep effects on the economy.
So as you know, there are people who argue, some quite vociferously, that the failure of policy in this episode was that we didn't spend enough time and energy helping homeowners, that we didn't use more government money to maybe buy up mortgages from people who are underwater and refinance them and so forth, and that had only that been done, we would have been spared a lot of the pain. What's your take on that?
Well, first, I think it's not quite accurate to say that nothing or little was done for homeowners. The Treasury, which ran these operations, did provide programs of various kinds that ultimately helped millions of homeowners refinance their mortgages or modify their mortgages, stay in their homes. But it's also true that millions more were not helped for a couple of reasons. One was the fact that Congress was very tight on the purse strings on helping homeowners, partly for political reasons. The other was that there was a lot of logistical problems in trying to do it. So if you're helping homeowners, you rely a lot on servicers who have the capacity to modify the mortgages and restructure the mortgages. In practice, the servicers were overwhelmed and they couldn't handle the thousands and thousands of mortgages that were there. So a lot was done. A lot more would have been great if a lot more had been done. It would have saved a lot of people a lot of distress. So I certainly agree that it was a shame that not more was done. That being said, I don't think that that was the reason that the recession was so deep. From the Treasury made some trade-offs, and they said, given how much money Congress is going to allow us to have, where can we best put that to work? And they decided that, for example, a tax cut that broadly reduced tax burdens for consumers across the country would have a better chance of restoring employment, getting the economy going again, than putting yet more money into the housing situation.
So if I'm reading your paper as a policymaker, a Fed chair or Treasury secretary a decade from now, what lesson do you want me to draw from the research that you've been doing?
Well, the basic lesson is that a financial panic, which disrupts the supply of credit, can be very, very damaging to the broader economy. And retrospectively, as the Fed and the Treasury and the FDIC were trying desperately to stop the panic and bring it under control, there was a lot of debate about, why are you doing this? And, and some folks were saying, the Fed is helping out its friends on Wall Street and not paying enough attention to the U.S. economy. Well, in fact, of course, what we were trying to do was, prevent more damage to the U.S. economy by trying to stabilize the financial system. That was the motivation. And my research suggests that, in fact, if we had let the financial panic continue and get even worse, the damage to the U.S. economy could have been even much worse than it actually was. Looking forward, what this suggests is that we need to make sure our system is sufficiently capitalized, has enough liquidity, has enough safeguards so that a panic like this, becomes very unlikely in the future. And moreover, if a panic does occur, and probably we can't guarantee that there never will be another panic, someday there will be, that policymakers have appropriate tools to respond to put out the fire as quickly as possible in a more systematic, predictable, and effective way than we had to deal with the crisis in 2008 when we were using whatever tools we could come up with to try to stop the panic.
In many ways, the work you've done for BPEA is a sequel to the work you did as an academic. But when you were working as an academic, you were understanding the Great Depression and the responses of people who are no longer with us. This time, you're doing research on a period where you were pretty central to the policy. How does that feel? What's it like to be researching your own decisions in hindsight?
Well, I'm trying to understand the mechanisms by which the crisis affected the economy. And this was something where I felt as a policymaker that while we did have obviously some information, some ideas, some historical examples to look at, that we didn't have enough quantitative, rigorous analysis to help us understand how the developments in the financial markets were going to affect the economy. And so I saw as a policymaker, I saw that gap. Now that I'm back in a more research-oriented mode, it's a chance to try to think about this at more leisure, and I hope to make it contribute to to policy making in the future.
Thank you very much for your time.
Thanks, David.